Revolving business line of credit. Get the revolving cash flow solution. Having access to readily available capital is crucial for growth and success. A revolving business line of credit, also sometimes called a business credit line, can be a powerful tool for businesses of all sizes. It offers greater flexibility compared to traditional loans and can be a lifesaver for managing unexpected expenses or seasonal fluctuations in cash flow. This comprehensive guide will look into the intricacies of revolving business lines of credit, empowering you to make informed decisions for your business. We'll explore how they work, the strategic advantages they offer, and some key considerations to keep in mind before applying. Let's begin by understanding the core concept of a revolving business line of credit. How revolving business lines of credit work. Access capital on demand. Imagine a credit card designed specifically for your business. That's essentially how a revolving business line of credit functions. It grants you approval for a specific credit limit, similar to a credit card. Within that limit, you can withdraw funds as needed. Unlike a traditional loan where you receive a lump sum up front, a revolving credit line offers more flexibility. You only pay interest on the amount you borrow, not the entire credit limit. Here's a breakdown of the key mechanics. 1. Credit limit. This is the maximum amount you can borrow at any given time. 1. Lenders will determine your credit limit based on your business's financial health, including factors like revenue, credit score, and time in business. 2. Drawing funds. Once approved, you can easily access your credit line through online portals, mobile apps, or even checks provided by your lender. 3. Repayments. As you use the credit line, you'll be responsible for making minimum monthly payments which typically include both principal and interest. 3. The faster you repay what you borrow, the sooner you'll have access to those funds again. 4. Revolving feature. The true power lies in the revolving nature of this financing tool. 4. As you repay borrowed funds, your available credit within the limit is replenished. 4. This allows you to continuously draw on the line of credit as your business needs arise. Think of it as a financial safety net that provides immediate access to capital whenever your business needs a cash flow boost. In the next section, we'll explore the strategic advantages of utilizing a revolving business line of credit. Unleashing strategic advantages. Why revolving business lines of credit can empower your business. Revolving business lines of credit offer a multitude of advantages that can significantly enhance your company's financial flexibility and growth potential. Let's explore some of the most compelling benefits. Enhanced cash flow management. Running a business often involves unexpected expenses or seasonal fluctuations in income. A revolving credit line acts as a buffer, allowing you to bridge these cash flow gaps without disrupting operations. Need to cover payroll during a slow month. Unexpected repair bill arise. A revolving line of credit provides the breathing room you need to address these situations without jeopardizing your financial stability. Strategic growth opportunities. Access to capital can unlock exciting growth opportunities for your business. A revolving credit line can empower you to seize time-sensitive opportunities like purchasing new equipment to expand your product line, investing in marketing campaigns to reach a wider audience, or taking advantage of bulk purchase discounts from suppliers. By having readily available capital, you can be more responsive to market shifts and capitalize on opportunities that can propel your business forward. Building business credit. Responsible use of a revolving business line of credit can positively impact your business credit history. Making timely repayments demonstrates creditworthiness to lenders, which can be beneficial when seeking future financing options like loans or lines of credit with potentially lower interest rates. Improved inventory management. Maintaining optimal inventory levels is crucial for any business. A revolving credit line can provide the flexibility to order inventory strategically, avoiding stockouts that can lead to lost sales, while also preventing excessive inventory that ties up capital. With a revolving line of credit, you can adjust your inventory levels based on seasonal demands or unexpected surges in customer interest. Flexibility compared to traditional loans. Unlike traditional loans where you receive a lump sum upfront and repayment terms are fixed, revolving business lines of credit offer greater flexibility. You only borrow what you need, and you can repay funds early without prepayment penalties. This allows you to manage your cash flow more effectively and avoid unnecessary interest charges. Revolving business lines of credit, a balanced perspective. While revolving business lines of credit offer significant advantages, it's important to approach them with a balanced perspective. Here are some key considerations to keep in mind. Interest rates. Interest rates on revolving business lines of credit can be variable and may be higher than those offered on traditional loans. It's crucial to compare rates and terms from different lenders before making a decision. Carefully assess if the flexibility and convenience outweigh the potentially higher interest costs for your specific needs. Debt management. Easy access to capital can be tempting, but responsible borrowing is paramount. It's essential to have a clear plan for how you utilize the credit line and ensure you can comfortably manage the ongoing repayments. Avoid overextending your business by living beyond your means. Minimum payments. Revolving credit lines typically require minimum monthly payments that include both principal and interest. Falling behind on these payments can damage your credit score and accrue additional interest charges. Make sure your business has a sustainable cash flow to comfortably manage the ongoing repayment obligations. Alternatives to consider. Revolving business lines of credit are not the only financing option available. Depending on your specific needs, exploring alternatives like traditional term loans, invoice factoring, or merchant cash advances might be more suitable. Evaluate the pros and cons of each option to determine the best fit for your business's financial situation and goals. Additional considerations. Tax implications. In some cases, the interest paid on a revolving business line of credit may be tax deductible. However, it's always best to consult with a tax professional to understand the specific tax implications for your business. Line of credit maintenance. Building a strong relationship with your lender is crucial. Making timely payments and demonstrating responsible credit utilization can increase your chances of securing a higher credit limit in the future if your business needs grow. Industry-specific considerations. The specific needs and uses of a revolving line of credit can vary depending on the industry you operate in. For example, retail businesses with seasonal sales fluctuations might benefit greatly from the flexibility offered by a revolving line of credit, whereas a construction company with large upfront project costs might find a traditional loan with a fixed repayment schedule more suitable. By carefully considering these factors and tailoring your approach to your unique business needs, a revolving business line of credit can become a powerful tool to unlock growth and navigate challenges. Taking control. Next steps for utilizing revolving business lines of credit. Now that you possess a comprehensive understanding of revolving business lines of credit, you're well equipped to explore how they can benefit your company. Here are some actionable steps to guide you forward. Assess your business needs. The first step is to conduct a thorough evaluation of your business's financial needs. Consider your current cash flow situation, upcoming expenses, and potential growth opportunities. Identify how a revolving line of credit can address these needs and contribute to your overall financial strategy. Research and compare lenders. Don't settle for the first offer you encounter. Research different lenders offering revolving business lines of credit. Compare factors like interest rates, credit limits, fees, and repayment terms. Read online reviews and consider recommendations from trusted business associates. Gather necessary documentation. The application process for a revolving line of credit typically requires documentation like business financial statements, tax returns, and personal guarantees from owners. Gather this information beforehand to ensure a smooth application process. Develop a repayment plan. Responsible borrowing is key. Before applying, create a realistic repayment plan outlining how you will utilize the credit line and manage the ongoing monthly payments. Factor in potential interest rate fluctuations to ensure your business can comfortably sustain the financial obligations. Maintain a good credit history. Having a good business credit score can significantly impact the interest rates and credit limits offered by lenders. Maintain a healthy credit history by making timely payments on existing debts and managing your credit utilization ratio effectively. By following these steps and leveraging the knowledge gained throughout this guide, you can make informed decisions about incorporating a revolving business line of credit into your financial toolkit. Remember, a revolving line of credit, when used strategically, can be a powerful tool to propel your business towards achieving its full potential. A revolving partner for business growth. A revolving business line of credit can be a game changer for businesses seeking to navigate the dynamic world of finance. It offers a unique blend of flexibility, accessibility, and strategic advantages that can empower businesses of all sizes. Consider this scenario. Imagine your business receives an unexpected surge in orders during the holiday season. A revolving line of credit can provide the immediate capital needed to purchase additional inventory and fulfill these orders, capitalizing on this temporary upswing in demand. Without this access to capital, you might miss out on valuable sales opportunities. Here's the key takeaway. Revolving business lines of credit are not magic wands, but rather powerful tools that require responsible management. By carefully assessing your business needs, comparing loan options, and developing a strategic repayment plan, you can leverage a revolving line of credit to 1. Bridge cash flow gaps and ensure smooth business operations. 2. Seize time-sensitive growth opportunities and stay ahead of the competition. 3. Maintain optimal inventory levels and avoid stockouts or excess inventory that ties up capital. 4. Build a positive business credit history for future financing endeavors. The final decision is yours. Do you want to remain confined by the limitations of traditional financing methods, or do you want to unlock the potential for growth that a revolving business line of credit offers? Empower your business to thrive. Research different lenders, assess your financial situation, and explore how a revolving line of credit can become your trusted partner on the path to business success. Like, share and subscribe to our channel. Call 888-653-0124 today or click the link in the description to learn more and share your success story.